Hi, everyone. I'm Peter Kinkaide, the CEO of Raintree Financial Solutions. I'm joined today by Jerald Tekatch, the VP of Sales and Marketing at Millennium III. Hi, Jerald.
Good day.
Jerald, can we start off by you giving us a high-level overview of what Millennium III is and what we're talking about today in terms of the investment opportunity?
You bet. Millennium III was started in 1981, so we've been around for almost 40 years. And it's really always been the way to find a channel for the average investor to own larger scale real estate, right? Our company's history is rooted in some residential, but for the last 30 plus years, it's been commercial real estate. So, your kind of neighborhood strip mall, industrial properties, occasionally a small office property, but really finding a way to have somebody absorb that into their investment portfolio, but they probably can't do it themselves. So we kind of found a way to provide that fractional ownership into their investment portfolio, and it has some unique pieces to it, right? Our particular structure is designed in a very tax advantageous way. So the year that you buy it, you get a nice big tax deduction that you can use against other income, whether it's employment income, taxable capital gains, dividend income, any of that kind of stuff. And at the same time, it's treated like a traditional rental property in that we buy these properties with leverage. So we pay off leverage, and actually the goal is to get it fully debt-free. The reason being, once the properties are debt-free, they turn into kind of a cash cow style investment that they provide an income stream year after year after year. So it's kind of a twofold investment strategy, one for tax planning today, and the other for a long-term income stream later into life at the back end.
So good for retirement planning as well as some today's sort of tax planning. So tax planning today and retirement planning later on.
Yeah. A lot of our investors are doing, retirement planning. Some of them are, even already retired that are doing kind of late stage of life planning, whether it's, assisted living, cost medication, or just really treating grandkids and that kind of stuff. And then we also at the kind of earlier end, a lot of our clients are young professionals, whereas they're saying, I may be buying this at 35 or 40, but I don't need to be retired to know how to collect checks, right? So it's an interesting demographic. The bulk of it is people that are, 10 to 15 years away from retirement that want to do that planning. But there is some alternative uses as well.
Now, each investment is its own property. So maybe just give me a brief description of the property we're focused on today.
Yeah, the current investment opportunity is an industrial property, or two industrial properties actually collectively in Regina, Saskatchewan. So what we look for is stable rent rolls, access to transportation routes for industrial properties, and on a broader scale, what are the supply and demand metrics of industrial real estate in that area? We find that really strong in Regina. Going into the current pandemic circumstances, it was around 5%. So in a industrial market of any major center in Western Canada, that's one of the better rates. That really means that that's really the normal amount of people kind of coming in and out of business, but you're really matching supply and demand. So you slowly kind of see rents increase slowly up and up and up. We've seen more recent updates, even post the first few months of the COVID lockdown, that the occupancy rates in Regina haven't dramatically changed. They're still less than 6%, so that haven't moved the needle by that much, which shows that industrial leasing marketplace has actually been fairly strong through the pandemic.
So you just touched on the elephant in the room. Next question is, how is Millennium III, and in particular this project, withstanding these pandemic circumstances?
Yeah, so far, it's hard to say perfect during something like this that has such a global kind of reach. But in the current circumstances, we think we've done fairly well. Portfolio-wide, so the current opportunity is investing, as you had mentioned, into one particular property. However, we've been doing this a long time. We manage 50 to 60 limited partnerships on behalf of investors. So we are a fairly large pool, about $325, $350 million worth of real estate in total. Now, collectively over that group, we do have retail, office, and industrial. Industrial has been the sector that's performed best. Over the entire portfolio, our rent collection was 80, 81, and 89%, pre-COVID levels going into April, May, and June. Now, we're very happy with that because that's actually the rent collection. That doesn't include deferral programs or the government subsidies that tenants are able to access. So what it's really done for us is our number one focus was how do we work with our tenants to keep them viable, right? We don't want to be the lender of first resort. We want to be the lender of last resort. So we want the tenants to find their way through through the various government programs. So our first step was assisting tenants, letting them know all the government programs that are available. You would be surprised how many smaller, more mom and pop local kind of tenants that didn't know all the different programs they could access to keep themselves viable. So that was really a big feature of our, protecting our tenants so that they can pay their rent, was just the knowledge of what these programs are about and how they work. The second step beyond that was working with our lenders to adjust our expenses, as mortgage payments is probably one of the bigger expenses. They have been nothing but wonderful to work with, and kind of they understand the connected nature that we have together. And then the third was working with tenants that can't kind of meet their obligations to say, what can we do? We can do a deferral, we can access the CECRA program, and we can, let you kind of pay later because we've been able to, adjust our expenses. So that's what we found has been really successful. To that, we expect that in the months of kind of July, August, September, we're going to start to get tenants that are paying back the rent that they've deferred. So we're actually expecting at some point to start collecting over 100% of pre-COVID level rents to kind of offset what was a little bit lower. So for us, it's really shifted the revenue, but because we've been able to, have very understanding and good partners, it's worked very well to shift that. The other piece is many of our investments are actually in their debt-free stage, so they don't even have that expense anymore. So really, it was just about collecting as much as possible and paying out what we collect to the investors. So it really has that ability to match, and that's again kind of getting back into my first point. That is the goal, that we really do want to get these properties debt-free, is because once the mortgage is gone, they're standalone entities, right?
Yeah, no, and that makes a lot of sense. And I mean, speaks, I think, a little bit. This isn't exactly the first downturn or cycle that Millennium III has had to manage its way through. I guess that speaks to the experience of the management team and the organization.
Yeah, it really does. We started in 1991, and again, I get the benefit of saying we, both the company and me, because can't tell my age. I was born in 1981, but the company has obviously got a vast amount of experience ahead of me and prior to me. And this is, I think this is we've been through 3 recessions, and obviously this is our first pandemic, but it's similar kind of philosophies of how do you adapt. We've seen that before as smaller changes, smaller scale, but one that a lot of people can recognize is the loss of movie stores, right? Netflix, that streaming content really did away with movie stores. We had 3 of them in our portfolio of that, as I mentioned, that kind of larger portfolio, and they all adapted and changed. One became a gym, one became a collection of kind of medical uses, and another just got split into multiple different pieces of retail. So, from our perspective, the marketplace has the ability to adapt and change. You see that occasionally in industrial as well. Tenants, they might want to kind of upsize and downsize and change their size. Industrial buildings are kind of built that way to absorb that. They're just kind of big brick kind of entities, and you put up your demising wall to kind of accommodate who wants to be what size. So we've seen that sort of movement through some pieces of our portfolio, but at the same time, we've also seen tenants that are continuing to renew. The current offering, to bring it back a little bit there, it's a total of 8 tenants over 2 buildings, 2 of which during the pandemic renewed their leases. Their leases just happened to expire during that period of time, and 2 of them have released. So it kind of shows that we're all concerned. We all want to proceed cautiously and get out of this, both from a health perspective and an economic perspective. But businesses are still going to continue and grow and thrive in some capacity. So we are able to kind of accommodate that in our industrial portfolio as well. And the current offering is, it was 100% occupied going into the kind of pandemic months. It's still 100% occupied, and we're hoping that the tenants find their way to be viable through this, and we'll accommodate and help as we can, or as we're asked to, if we can. And we just want to continue onwards and upwards.
Yeah, and it sounds like you're in fairly regular communication with your tenants. So you've got a bit of a pulse in terms of how they're doing. And it sounds like some of them are ineffective, and some organizations have been doing better through this period of time.
Yeah, that's exactly the case. I think that's one of the strengths of our business is that we have our own subsidiary property management company, and they only manage our own properties. So we, as you mentioned, have that direct pulse with the tenants. We started a list of, who's asking for help and what programs and all that kind of stuff to kind of help track and manage it for tenants and help them out in that way. But that's what's really helped. It's that direct conversation. We didn't have kind of an external company that had to aggregate and answer to another 100 different commercial real estate owners in that same city. Our focus was able to be on our properties for our investors and to kind of help out and maintain the viability of our tenants. So it's been really, it's been an interesting process, but I think we've accommodated it very well during this process.
Well, this has been a great conversation, Jerald. Thanks for your time today. For those who want to learn more, Jerald's going to sit in on a webinar coming up in a couple of weeks. Please attend, RSVP. We look forward to having you. Thanks, Jerald.
Thanks a lot.